In this video, we're going to talk about how we can use price action rules to help us identify high probability setups and what is the directional bias of the market. So as a price action trader right now, I'm looking at the ES, and what is the structure telling me? Well, I'm going to analyze the structure, and this is the beginning of today's session. And what I can notice, important information, that we never even had some slight downtrend working lower. We started straight with an uptrend, so I have to identify a channel. There's always a channel being present for every single price movement, and you will see why I always draw these channels. It's going to help you predict where the market's going to go. So I have the main channel that needs new high. Okay, we broke the channel. I expect new high to be tested following the trend line rule. I'm going to also draw the secondary channel. So two uptrends need new high. We had great high probability setup, higher low, which actually is a second entry long. I believe new high here, no break above, no break here, first entry long, pullback. So this would be second entry long, or you can basically view it as a higher low. So second entry long to test new high, but it was quite early. Now the market opened, and this is where the regular session starts. Now we have two legs down. The important thing I'm paying attention to now is how broad these two legs down are. The broader they are, the more it's confirming that the downtrend is over and it's negating any wider channel. Remember, trend is up, so I'm thinking about buying. So I'm going to respect two legs down. Push above EMA is confirming that the buyers are back in the market, and everything is telling you that the bias is bullish. And we have high-low confirmation set up again. Now this right here is more of a contextual high-low. Okay, but you expect new high for two uptrends, great high probability setup. And what I'm going to do, I'm also going to use high time frame 10,000 tick chart. Okay, here we are looking at 10,000 tick chart, and what you can see, the same analysis. Okay, just slightly higher time frame will help you solidify your bias and what to look for on your main chart. So we have nice uptrend working higher, we have new high, first entry long, pullback, second entry long on 10,000 tick chart, double rejection of the EMA. So once I can see second entry long triggering on 10K chart, it confirms I can take a trade on my main 2000 tick chart. So the high-low is working, it's working. Your stop loss goes one tick below the signal bar. Felt second entry short bad bar I cannot take. Your high-low still survived by one tick. This is why we keep the stop loss one tick below the signal bar. And now we have second entry long, new high, first entry long, second entry long, minute to get pullback. Small little triple test. It's not really clean triple test, but I'm gonna call it small little triple test. Great high probability setup as well. As we talked about, two uptrends need new high. 10,000 tick chart is telling us, okay, we have a second entry long that needs new high. Everything is bullish, and we have great price action to start the day with. Great high probability trades. We have another second entry long here, and this second entry long is not that bad. The reason why I stay away from the second entry long, because you can see we have triple top, one bounce, second bounce, third bounce, very close to being new high. So I prefer buying when the correction phase ended and the push phase is just about to start. Now the push phase feels a little bit over. But if you took this trade right here, okay setup, you still survive by one tick again. Not a bad trade, just the triple top is a little bit concerning. So I'm not going to mark it, but if you took it, you read it correctly because you have the bias on your side. Two trends still need new highs, not a bad trade. Second entry long pattern, you read it correctly. New high was tested, so uptrend played out. So everything right now to the upside played out. This is why we draw these channels. So now what I'm going to do, if the uptrend is going to continue working higher, I'm going to draw some bigger channel. But it didn't happen. We reverse all the way down like this. So I'm going to play it break a new high, and I'm going to draw brand new downtrend working lower. Okay. That is just lower high. Had there been some failed second entry long reversal pattern below EMA, you can consider. And we already have a breaking new low. So now everything played out, and this is where nothing is confirmed. And I'm not even rushing to look for trades. I'm really laid back now. I'm not even paying too much attention to what's happening here because everything played out to the upside, to the downside. The range is just being established. I don't want to go long or short just yet because this feels like neutral bias before some new trend will emerge. So everything played out, so I'm just going to remain patient. If you have downtrend in play, I would be more inclined to be selling off these highs, but because downtrend played out, I mean, you never know what's going to be the next move. Okay, it takes time for a new cycle to develop. Okay, market keeps working lower, keeps working lower. Okay. So I'm going to redraw a new downtrend like this, or what you can basically draw channel like this. I didn't like playing this channel at the time. Why? I wasn't playing this channel live because I see one leg down, break, second leg down. Okay. So I wasn't playing this channel at the time. It looked quite rangy. If I'm going to zoom out, it looks quite like a trend range. So what I was playing was two legs down, and I skipped the second entry short. There is no trigger anyway. There is no break below our signal bar, so you cannot go short. There is no entry, but I wasn't looking to go short because it looked like broad two legs down. Okay, it looked like we may actually have some reversal above EMA, so I was just being patient. Okay, but the market keeps working lower and we have some nice resistance here being formed. So this is confirming, okay, there is indeed wider channel like this, or what you can do, redraw secondary channel for this leg right here, because of a downtrend break new low, you're working lower, so I can redraw a new channel. So now we have price action going sideways, and this was almost tempting trade. Quadruple top, I almost was considering taking this mini second entry short as well. Well, basically this is new low first entry or second entry short, so this is almost quadruple top, but problem is it broke above it and it's a doji. Had there been stronger bearish bar, it would have sucked me in, which is a good thing I skipped. But the reason why this trade failed, if you can spot the reason, number one, it's a doji bar, neutral bar, we broke above, but more importantly, finally now market created the push to new high. Okay, this is the highest high, and now you finally have exceeded. You can see on this you don't have a new high yet. Now finally you have the higher high, and this is tempting trade. This is kind of a failed breakout, but way too advanced. I didn't take this. You can see there's a difference between this doji and this. This is more neutral because there is bullish tail. Here there is only tail at the top, bearish reversal, very tiny tail at the bottom. So this is more of a bearish doji. This is more of a neutral doji. I didn't take this because I wanted to see lower high below EMA. I wasn't quite sure, but some advanced trader can consider taking this. Can I get a lower high below EMA? No lower high. This is too far down already. I can, of course, take this way too far down into these lows. At the time, you would have it something like this. So it moved too far down. Was still considering some second entry short maybe. But this is way too big, too far down again, so I can't take it. Okay, market keeps going lower, and downtrend played out with the break. Push to a new low. So everything played out. You're pushed above EMA, so now what I was looking for, failed second entry short reversal pattern. Why? Because all downtrends played out. The break is very broad, which is confirming, okay, bearish momentum is over. The broader it is, the more it's negating wider channels. And it looks like a trend range. So I was expecting failed second entry short. Can I get a failed second entry short? No failed second entry short. Overshoot, it's not acting as overshoot, so I'm going to widen the channel. New high here, first entry long. We have a new high, but the break is so tiny. I'm going to redraw it slightly wider. Also on 10,000 tick chart, it looks like in play. But you can tell, if I'm going to widen it, break is so tiny, I can still keep the first two swings intact. Every time you're going to widen the channel, let's say something like this, and you're going to miss the second swing, that's when you have to ask yourself, hold on, am I drawing the channel correctly? So widening the channel, if you can still keep the initial structure intact, is a good sign that the channel can indeed be slightly wider. If you widen it and you're suddenly missing the early bounces, that's the sign that you should probably keep the tighter alternative just to be safe, because you can always widen later. So I'm looking for second entry long. This uptrend still needs new high first entry long, second entry long, but problem is this is an inside bar. This is an inside bar and didn't even trigger. It didn't even trigger. It actually triggered here, so get a second entry long to work to new high, but I can't go long here. I don't even like the double bar because this is where your entry needs to be, and the stop loss goes all the way down here. We prefer double bars when they're closer to each other, so this is not the greatest trade. Downtrend played out, and now we have FOMC announcement soon, so you want to stop trading like 1 hour before FOMC just to make sure, because it really slows down a lot. There wasn't that much volatile price action. We're just going sideways. It looks like a trend range at this point, but you know, there's no good long trade, no trigger here. Nothing is triggering. We're going quite sideways. It's just better off to be patient here. Bottom completely dropped, so you definitely have to stay away from your keyboard. There's massive spike in volatility. There's no trade anyway. We have a spike and a channel pattern. Something like this. No second entry short at the EMA. Had there been second entry short at the EMA, you can consider testing the new low. Okay. Initially, I had wider spike and a channel pattern in play, but as I saw price action pushing back above EMA here, here, and here again, this is where I adapted to break in extreme. Downtrend played out, and I redrew wider channel, something like this. Here we have what looks like to be an overshoot, but also this is very close. It's very hard to say if this is overshoot or not. At the time I didn't have overshoot, but we can definitely tell because I can still get to tell here, some here. It's probably overshoot. Now we have a second entry long. This is actually a decent second entry long. I don't mind. Now The bar is 6.75, so you definitely need to use some limit order. Okay, you need to decrease the risk, or you can skip the trade and take it on sim, because after FOMC, market was volatile, but ATR was out of control. So I'm going to market second entry long here, but of course, almost 7 points. You need to use some limit order here, decreasing at least to like 5 points. It actually managed to get 5.5 points scalp, but after that, market reversed down. It's confirming that it's acting like overshoot. Almost pushed to a new high. We don't have a new high fully. There's nothing for me to take. We're below EMA now. What's going on here? Correction is longer. High low below EMA, not good. Maybe if the trend is super strong and trend is super confirmed, the channel, but this is just potential overshoot. It's quite weak. We're starting to go sideways. Below EMA is too risky. Even though it worked. And now it's getting pretty much way too late. Market is about to close now. Well, we actually have some lot of price action towards the close. So this is the overall structure for today. As you can see, drawing these channels will help you navigate the market accurately, and you know what you can expect and what is the next directional bias of the market. Then you only need to wait for the pattern to confirm the key entry point, and then you can take a high probability trade. This was massive spike in volatility, so you have to be careful. Once again, typical FOMC, either scale down the number of contracts, go on micros, or just sim trade it to get the experience. But the bars can be sometimes too big that your one hit can erase a lot of winning trades from previous days. So it's better off just sitting on your hands and just sim trading this so you don't get burned that bad. We also have one last failed second entry short. New low first entry short, second entry failure, but it's a little bit too late to take the trade. So I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck your trading.